His results season. So we continue with our results coverage. Now, Kagiso Media reporting a 2% decrease in in headline earnings per share to 80.6 cents. The company saw a 56% increase in revenue to 709 million rand. Mefi Morobe, CEO of Kagiso Media, joins us. Mefi, I made the joke about releasing these results in the shadow of the budget yesterday. You're not in that camp, are you?
Not quite. I think as a media company, you know, any reports from the budgets are always good for us. So but there's a lot in the budget that suggests that a significant amount of mining on our side of the opportunities that it might bring up, in fact, will be taking place. So.
Yeah. Let's talk about those opportunities, because one of the issues the ministers yesterday was the allocation of more funds for DTT, I suppose for media companies, particularly within the broadcasting space. This is a big opportunity.
It's particularly important, especially for Kagiso Media, which as a black-owned media company, we have been involved in the whole space of trying to get some better articulation of what opportunities lie in the DTT space for us.
Sure.
We've been primarily focused on radio over the years, largely mainly because of regulation.
Right.
And the DTT would offer some important opportunities for us, especially.
Let's detail those if we can. What would it mean for Kagiso, and how big a transformation do you potentially see the group having because of this?
Well, for Kagiso Media, it basically means that we would be moving into yet another platform,
sure, and
that is television, and where content, especially...
You're coming to take us on? Well,
you know, for success, you don't have to take anyone else up. It's about partnerships.
I was hoping you would say you come and partner with us. Okay, so there are opportunities on that front. Let's talk then, come back to this set of numbers. And as you said, it has been a difficult interim set of numbers here. The revenue up 56%, but Coheadline earnings per share just 9%. What happened?
Well, I think that there had been a few once-off events that have impacted on that. But primarily, I think when one looks at where we are relative to the 12-month period that we'll be accounting for in June, I think we'll be able to come back on track, because clearly what would have happened is that where your core headline earnings as a measure that we now introduce in the calculation, it seeks to define what the sustainable part of our earning profile actually is, which is very important for investors, because on the margin, you know, we'll be having activities that would take us up or down, but in the end is really where the sustainability lies, and that's really what we're focusing on.
Let's talk about where that sustainability lies then in terms of earnings prospects going forward.
I think in terms of the sustainability going forward, we actually are focusing on strengthening our core.
Okay.
We're focusing on broadcasting. We're looking at investments that relate to content production, because when one looks at the pipelines that are coming, it is clear that we have to be in a good position as Kagiso Media to play in that space, because that will also help to, in fact, to protect our core, which is broadcasting and radio. Okay,
so let's talk broadcasting and radio. Now, you're saying we have spoken about what's going to happen on the DTT front. Let's speak about radio. What more can you do with radio? Is there room here for consolidation? Are we not too fragmented? Too many voices, because now we're talking community radio stations, we're talking national, we're talking regional.
Well, there is room for consolidation, except, of course, that the regulatory environment would restrict us to only 2 FM licenses. So our approach is to get into positions where we are able to get the benefit of any radio opportunities out there. And here, of course, we have to look even beyond South Africa. We have been looking in the continent for opportunities, but as you say, there's a lot of fragmentation there. So to go to those other new geographies would require significant investment. So our project is to be able to get our investors behind us to believe in the vision of what Kagiso Media will stand to bring value to once we make those decisions.
Of course, you're going to battle with some of the issues that we also have been battling with. I mean, you spoke about content production as being one of the major planks. Now, we know content production is impacted by social media and the explosion of information all around us, which, of course, to a degree challenges us, but at the same time, it presents opportunity because it's how credible you are, right?
Absolutely.
Within the African space, though, What can you do, particularly given we know the attitude of African governments to information distribution? They want to control that source.
That's Africa on the one hand. On the other hand, I think that there's a great degree of promise, as democracy, in fact, is a major issue of discourse in Africa. So clearly, where we are as Kagiso Media, like many South African companies, you know, the play in the next 10 to 15 years is on Africa.
True.
So as you could see, even international players are making their own moves in that context. So we I think, are in a better position from a South African perspective to find those partnerships and right partners that would enable us to actually bring our capability to bear on those opportunities.
So you speak of partnerships. You're not talking acquisition. You're not talking going there and setting up an office.
You know, I think we've been around the block a few times, and we understand that if one is to be successful in the continent, it is important to have good partners. It is important to be trusted, to be seen as bringing value and contributions to those assets.
Maybe before I let you go, perhaps just structure for me what a future Kagiso would look like. I had DTT, I had content production, I had broadcasting, and within it, radio. Well,
there's also information solutions, and one of our environments involves, in fact, the information services sector, which is very important. But of course, and here one looking for a mix of platforms that are compatible, that would actually enhance and live off each other, whilst at the same time ensuring that the sustainability of the core is not compromised.